Hey traders, welcome back to Trade Empire. In this video, we will reveal our best strategy that you can use with the MACD indicator. And in this video, you will learn everything about MACD indicator. And you will learn that how you can use MACD to execute your trades. Let's begin our video after a short intro. The MACD is also known as Moving Average Convergence Divergence. This indicator is one of the most simplest and popular trading indicator used by a lot of traders to analyze the market and to identify the market direction. Essentially, it is a trend-following indicator that shows us the relation between two moving averages. And to apply it on the chart, you will go to the Indicator tab at the top right corner and search for MACD. Then click on this Moving Average Convergence Divergence to apply it on the chart. How does the MACD work? There are four components in the MACD indicator. First of all, we have these two lines. The blue is the MACD line, and the orange one is the signal line. What is the difference between these two lines? The MACD line moves faster than the signal line, and it is more sensitive to price changes, which is the main focus on the MACD indicator. And the orange signal line reacts slower than the MACD to price changes. This is the main difference between these two lines. Next, we have the histogram, which represents the difference between the MACD line and the signal line. Here you can see, when the MACD line crosses the signal line to the upside, the histogram will turn green. And if the MACD line crosses the signal line to the downside, the histogram will turn red. And if the gap between these two lines is bigger, the histogram size will also be bigger. But if these two lines get closer, the size of histogram will be smaller. Next, we have this zero line, which represents the center of the MACD indicator. How to identify momentum using MACD indicator? Many traders use MACD indicator to identify the momentum of the market by looking at the crossover of the MACD line and the signal line. Let me teach you with an example. If the MACD line crosses below the signal line, it shows that the market is in a downtrend. And remember, when the MACD line crosses below the signal line, both lines should be above the histogram. But if the MACD line crosses above the signal line, it indicates an uptrend in the market. And both MACD and signal lines should be below the histogram while crossing each other. And you can also utilize the size of histogram to figure out the strength of the momentum. If the MACD line crosses above the signal line and the histogram is getting bigger, it indicates us that the upward momentum is getting stronger. And when the histogram starts to get smaller, it shows us that the upward momentum is getting weaker and market can change its direction. Now let's talk about MACD indicator strategies. But remember one thing, never use MACD alone to execute any trade. Because sometimes MACD only shows the short-term trend, which can lead you to a losing trade. And this is a common mistake that many traders make. They ignore the price action and just execute their trade using MACD indicator. And then they face unnecessary losses. Let me show you an example. As we can see that the market overall trend is bearish, and the MACD line is crossing above the signal line, giving us a buy signal. But if we ignore the price action and chart behavior, and just execute our trade on MACD signal, then it can lead us to a losing trade. Why MACD is giving wrong signals? Let me clear, when a little pullback comes in the market while continuation trend. As in picture, the market trend is bearish, and when a little pullback comes in the market, the MACD line crosses above the signal line, giving us a very short-term signal. So the MACD is not giving wrong signal, it's just telling us the market behavior in short terms. But as a good trader, we also need a long-term vision of the market to stay ahead and to avoid losses. because a professional trader never trade against the trend. Now look here, the market overall trend is bullish. And when this minor pullback comes in the market, the MACD line immediately crosses below the signal line, giving us a sell signal. And to avoid this, I will recommend you to apply the 50 EMA on the chart. You can also use 100 for more long-term vision. But if you are a day trader, 50 will be enough for you. And after combining both of these powerful indicators, you can safely trade the MACD, while staying in the same market direction of the long-term trend. Now let me show you properly that how to execute any trade using these indicators. Remember, when the price is above the 50 EMA, the trend will be considered as bullish, and if the price is below the 50 EMA, then the trend will be considered as bearish. Now, as we can see that the price is above the 50 EMA, so now we are clear that our trend is bullish, and we only have to look for long opportunities. And now we will wait for the MACD crossover. And we can see that the MACD line crosses above the signal line. And when we combine MACD with EMA, the MACD lines can be above or below the histogram. It does not matter. The only thing matters is the crossover. So now we can open a long position here. Stop loss will be a couple of pips below the 50 EMA. And for take profit, you can target the recent swing high, or just 1:2 risk and reward ratio. And finally, we have a winning trade with high reward and low risk. Now let's see a bearish example. Look at the chart. The price is trading below the 50 EMA. So we have a clear bearish trend, and now we will just wait for the MACD lines crossover. And here, the MACD line crosses below the signal line, giving us a sell signal. So, we will open a short position here. Stop loss can be above the recent lower high, or just a couple of pips above the 50 EMA. And when you execute with full confirmations, you always ended up a winning trade. Now let's move to our next strategy. The previous discussed strategy was for beginner traders, and was much easier to learn and understand. Because if you rely only on MACD indicator, then you can only trade in trending markets, not in ranging scenarios like this. Because when the market is in consolidation phase, the MACD can give you many short-term signals, and they can lead you to lose many winning trades. So to increase your winning ratio, I will recommend you to use a more advanced version of this strategy, which is based on price action and MACD indicator. In a continuation trend, we will first identify the overall trend of the market. And here we can clearly see that the market is in a bearish trend and breaking through the structure to the downside. And if we look at the MACD line, we can see that it crosses the signal line to the downside. But we will not execute here. We will wait for a pullback. And then we will look at MACD for final confirmation. After this minor pullback, if we look at the MACD line, we can see that it is crossing the signal line to the downside. So now, we will open a short position here. Stop loss will be a couple of pips above this recent lower high. And for take profit, you can target the nearest key level, or just 1:2 risk and reward ratio. And look, after price action and MACD confirmation, we have a winning trade. Now let's move to a ranging market scenario and learn how to trade in ranging markets using MACD and price action. Here on the chart, we can see that the market is neither going upward and neither downward, and moving in a consolidation phase. So first of all, we have to identify any important key level. That can be a fresh recent key level, or can be a multiple rejections key level. As here we have this recent high as our key level, and we will wait for the price to tap on it. and after price taps on our highlighted Q level, we will then move into 2 times lower time frame, as I was using for our time frame, so I will move into 15 minutes. Here in 15 minutes time frame chart, we can see that price got rejected from our highlighted Q level, and the MACD line is also crossing the signal line to the downside, giving us a clear sell signal. So, we will open a short position here. Stop loss will be a couple pips above the key level, and we can target the nearest for our time frame key level, or just 1:2 risk and reward ratio. And we have got immediate fruit, and we ended up with a winning trade. Now let's move to our next strategy that we use to trade on reversal market scenarios. Here on the chart, we can see that the market was in a bearish trend, and this was the recent lower low and lower high created by the price. And the next, price has created this change of character instead of creating new lower low. So now, the bearish market turned into the bullish, and we will only look for buying opportunities now. And now, we will patiently wait for a pullback. And now we will wait for the MACD to cross above the signal line. And here we have the crossover of MACD and signal line, so we can open a long position here. And finally, all of our trades ended up being profitable. So that's all for this video, guys. I hope you have understood everything. If don't, then you should watch this video again and again to learn all about MACD clearly. Like the video to show your support, and subscribe the channel for more trading content. Wish you good luck for your trading journey.